watching special coverage on monetary policy. In a few minutes from now, Reserve Bank of India Governor will detail the monetary policy, and to discuss this, we have with us Aastha Gudwani and DK Joshi. Welcome, Aastha and Mr. Joshi. First, I want to come to you, Mr. Joshi. What is your anticipation? 25 basis point or 50 basis point cut?
We are expecting 25 basis point, and the reason is that if you look at the development since the last policy, inflation has come in lower than expected. So I think the focus will be on growth, and to do that, central banks typically do it in baby steps, and we believe that there will be a 25 basis point cut today.
All right, so 25 basis point is the expectation from Mr. Joshi. Aastha, what do you anticipate? You would have seen Governor entering Reserve Bank of India. Do you make something out of the attire and the walk he made?
Well, nothing really from the attire and the walk, but we do expect a very opportunistic 25 basis point cuts in this meeting today in few minutes from now. And I use the word opportunistic rather carefully. In our view, there is no pressing need for the RBI to cut today. But because it's an inflation targeting central bank and inflation is actually closer to the 3 handle, and in the April-June quarter, it's expected to average about 50 to 60 basis points lower than RBI's inflation forecast, I think this will be a very opportune time for the MPC to deliver a third successive rate cut, even though the growth situation does not quite demand it in a very pressing manner. But that said, no read between the lines from the governor's attire or the walk for that matter.
No, I was expecting some answer because of the shade he's wearing. But anyways, coming back to the inflation and growth dynamics, Governor has clearly stated that now they want to shift towards growth. Mr. Joshi, do you think that stance will continue?
Expected and growth is likely to be below potential. So obviously, I think the monetary policy, which has a cyclical impact on the economy, will focus on moving the growth up from these levels. And I think since monetary policy impacts with a lag, so I think they'll continue with the rate cuts. And growth inflation dynamics are the inflation is more favorable, so to say. Growth is less favorable at this juncture, so the rate cuts.
So, of course, the growth is the need of the hour at this point of time. But if you remember in the last numbers which has been released by the government in Q4, 7.4% GDP growth has come in for FY25. Do you think, Aastha, there will be revision in GDP forecast considering we have performed better, but at the same time the headwinds due to trade tensions remain?
So I don't think RBI is going to change their FY26 GDP growth forecast. It's at 6.5. That's the number that we have as well. In fact, the last number that came in was exactly in line with the second advance estimate that MOSPI had released. So also, just for your viewers to appreciate, the 7.4% GDP growth rate has a 1.3 percentage points coming in from net indirect taxes, which is not necessarily representative of growth. That said, I think for FY26, it'll be prudent for the RBI to retain their growth forecast at 6.5%.
Similarly, if you talk about inflation, the data has come in better than the expectation. Even the Reserve Bank of India's forecast has said that in Q1, Q2 and Q3, inflation is going to be below 4%. Mr. Joshi, do you think there is a scope of revision there, or you think 4% will be intact for the entire fiscal year?
Also some risks to inflation. So I think central bank will keep it at 4%. Although I think lower crude prices and good monsoons promise that the gains on inflation could be durable in nature. But I think we all know that there are climate changes that impact agriculture and food inflation. So you need to be a little watchful on that front.
All right, and talking on liquidity front, in January we were talking about 3 lakh crore deficit, but now we are sitting around 3 lakh crore surplus in the system with a kind of a liquidity injection which has been done by Reserve Bank of India around 8 lakh crore. What do you make out of this situation in Aastha, do you think the steps which has been taken by Reserve Bank of India in terms of OMOs and other liquidity injection steps that will continue? Or do you think some kind of pause there?
So we don't see the RBI continuing to do OMO purchases in the magnitude that they have so far, especially because the dividend from the RBI to the government is now going to become a part of the liquidity. I think RBI will be very proactive in continuing to say that they will inject as much liquidity as the system needs. And as we now know, Governor Malhotra would like to keep the liquidity surplus at around 1% of NDTL, which is about 2.25 trillion, 2.3 trillion. I think that's the number which will be maintained in a steady state manner. But I don't see a big liquidity infusion measures getting announced in today's meeting.
If you like this video, then like, share and subscribe to ET Now.